Good morning all. Let's start the session. Today we are going to have day one session. In this day one session, we are going to discuss planning terminology, what is bottoms-up planning, what is top-down budgeting, what is BPC terminology, how to create an environment. These are the items we are going to discuss. Right. If you are not able to hear me, just select mic and speaker in the go to. Right. So let's start with planning terminology. This is the agenda, planning terminology, bottom-up planning, top-down budgeting, and BPC terminology, environment creation. Let's start with planning terminology. Frequently used for the planning are like forecast, rolling forecast, plan, budget, and strategic planning. These are the frequently used terminologies in planning function. What is forecast? Forecast is basically current year estimations are called as forecast. What does it mean? What are current year estimations? Let's say I am in 2014. I am in 2014 Q2 quarter 2 and I want to estimate this year how much sales would be, or this year how much revenue I can get. So for that, what I have to do, I will prepare an Excel sheet. In that Excel sheet, product in the rows, time in the columns. And I'm expecting product A 38,000. I'm going to sell in 2014 April, 45,000 in 2014 May, and 35,000 in 2014 June. Same way, July, August, September, October, November, December. So, current year, for this particular month, what is my sales? For this particular month, next month, what is my sales? So, these estimations are called forecasts. If you Google the meaning of forecast, you might get different meaning for forecast. But in based on my experience, okay, if you understand forecast as current year estimations, then it will be easy for you to understand client requirement. So forecast, current year estimation. The next one is next year estimations are called as plan. What is plan? Next year estimation. So the current year means 2014. Whatever forecast, whatever estimations you are doing, that is forecast. If I'm estimating for the next year, that means 2015, that is called as plan. So how many are going to estimate? Next 1 year. Let's say next one, when I am estimating, that I call it as plan. For example, I'm in March 2014 or May 2014. I'm going to estimate my sales for the next year. Let's say product 2015 January, I'm going to sell something around 40,100. 2015 February, 45,500. 2015 March, 50,000. 2015 April, 50,000. Like this. Next 12 months, like 2015 January to 2015 December. Let's say calendar year is my fiscal year. Product B, these are the things. C, these are the estimations. So currently, next year estimations are called as. These two are very simple. Now, what is strategic planning? Like we are estimating next 1 year, right? Next 1 year, 2015. Now I want to estimate 2015, 16, 17, 19, 20, next 5 or 10 years. What is my sale? That is strategic planning. So strategic planning is basically next 5 to 10 years, only for the current year, only for the next year. Forecast is for the current. That is the difference between forecast, plan and strategic planning. I want to understand what is budget. Sometimes you will word called what is budget. If you want to understand what is budget, first what is bottom up planning, what is top down budgeting. To understand budget, first you have to understand planning, then you have to understand top down budgeting. What is bottoms up planning? It is the frequently used planning word, bottoms up planning. So let's see how it works. Like see here, I have a structure. Let's say okay. So now what is bottoms up planning? Let's say buying is a telecom industry, right? I have stores in every location, like in Bangalore, Chennai, Mangalore. I have stores. Let's say Vodafone stores are there in Chennai, Madurai, Bangalore, and Mangalore. So I want to estimate what is my expenses for these centers, for these data centers or customer care centers. So when I'm talking what is my expense, what expense this particular station is going to incur. Let's say Chennai, they have to pay their customer service executives the salary. Sometimes they have to travel somewhere, so convenience, hotel expenses, all these things, and they have to buy some water and day-to-day food items, all these. So all these things, how much they are going to, let's say, how much they are going to incur next year, that they have to plan. Next year, what expenses they need. So for this particular January, I want this much expense. I mean, this much money. For particular February, I want this much money to spend. So Chennai, they are going to estimate, like say 30,000 they estimated. Madurai again estimated 20,000. Same expenses. Bangalore estimated 22,000 and Mangaluru estimated 13,000. For example, now Tamil Nadu. Okay, Chennai comes under Tamil Nadu state. Bangalore and Mangalore comes under Karnataka state. So what is the Tamil Nadu expense then? Tamil Nadu is having Chennai, Madurai or some other location. So if you aggregate the value of all these two locations or whatever locations Tamil Nadu is having, then you will get expenses from the lower level at Tamil Nadu, from the cities. So 30,000 plus 20,000 is 1,000 plus Tamil Nadu office. Tamil Nadu, when I say Tamil Nadu will have some expenses. Let's say Tamil Nadu Tamil Nadu head office is having 10,000 expenses. So at this level, second level, Tamil Nadu is having 60,000 expenses. Same way, Karnataka 22,000 plus 13,000, and Karnataka own expenses are 5,000, so 40,000 their expenses. Tamil Nadu and Karnataka comes under South. South expenses are like 1 lakh, 60,000 plus 40,000, 1 lakh plus 20,000. South office expenses are 20,000.
Hello.
Yeah.
Yeah. Hi. This is Anita. Just now I joined.
Yeah, Anita.
Yeah. I can't record your section though.
Yeah. After every session, I will forward the recording to you.
Okay, no problem. Thank you.
Yep.
And what topic you are teaching actually?
This is day one session. We started with the planning terminology. So today we are planning like what is planning terminology. We are going to complete what is planning terminology. Then we are going to discuss bottoms up planning, what is top-down budgeting. If we have time, then we are going to discuss BPC terminology. Then we are going to create one environment for BPC. This is today's agenda. We discussed what is forecast. Forecast is current year estimation. Plan is next year estimation. Strategic planning is next 5 or 10 years estimation. Now we are discussing what is budget. So to understand budget, first we have to understand what is bottoms up planning, what is top down budgeting. So bottoms up planning, I have a structure. I have cities. On top of cities, state. On top of state, I have region. Then on top of these regions, I have corporate office. Now I want to know what is my next year expenses at corporate level. Okay. So when I want to know at corporate level, I have to start my plan from the bottom. So Chennai plant 30,000, Madurai plant 20,000, Tamil Nadu plant like 60,000, Karnataka plant 40,000. Total at south level it is 1,20,000, and at the corporate level it will be 1,50,000. 1,20,000 south expenses plus corporate office will have their own expenses, something around 30,000. That's why 1,50,000 is my bottom up planning expenses. So total for the total company, my estimated expenses are 1,50,000. This is my bottom up planning. From the level, I will start my expenses capture or revenue capture, so that I will understand at the top level what is my this is bottom up planning. Now, what is top down budget? So top down budgeting starts from the top, right? Bottom up planning, from the bottom you are getting the result, right? For the top down, at the top some figure will be there that will be allocated to the next level, below level. Let's say at the corporate level, my bottoms up planning figure is 1,50,000, which I captured using bottoms up planning. So corporate level, there will be some board meetings. There will be so many meetings. Then at the corporate level, come up with some budget. That means what they say, all the locations need 1,50,000 as expense, but the corporate office, the board of directors can say, we don't have. Hello, can you hear me now?
Yeah, I can hear you.
Okay. So when my voice is up, bottom planning am I covered? So when I am discussing slide number 15 only, my voice cut, right? You are not able to hear my voice, right?
Yeah, from the start of this slide, we were not able to hear you.
Okay. Kindly mute all. You can mute yourself. You select the microphone icon, green microphone icon. You will be muted. Whenever you want, just click on that. You will be unmuted. Okay. So bottoms of planning. Okay. I got one figure at corporate level. Now I estimated my total expenses will be 1,50,000. Is at corporate level. Now how I got this figure, you know, like every from the city to state, state to region, regional to corporate office, I captured the expense. We to know like total 1,50,000 is my bottoms of expense, total expense. Now the corporate office top down budgeting. Now we are going to start what is top down budgeting. Yeah. Now the corporate office is having a figure 1,50,000 as their total expenses based on bottoms of planning. The corporate office going to have a meeting. We call, let's say that's a board of directors meeting. In that meeting, they discuss about this bottoms of planning. And they come up. They will come with one figure, which is called as budgeted figure. What they say, like we discuss this bottoms of planning. Our company is going to have only 1,25,000, or our company can spend only 1,25,000 in the next year. So the budgeted amount for that company is 1,25,000. Now the question comes, like I planned 1,50,000. You are releasing only 1,25,000 budget. How to handle now? Okay, so this 1,25,000 will be distributed to the all the lower levels based on some ratio. That may be based on their actual spend in the previous year, or that may be based on bottoms of planning figure. That may be based on some keys. Keys means, okay, 10% belongs to Chennai, 20% belongs to Madurai, Bengaluru, 10% belongs to Bangalore. So there are so many ways. That depends on the how to distribute that figure. Now, total budget at corporate level is 1,25,000. Now, for the corporate office maintenance, they need some amount. So, what corporate office did, they kept 25,000 for their expenses. Because corporate office will be there in one particular place, one particular building. They have to pay rent for that building. They have to pay salary to the drivers, manpower, whatever they have. Canteen expenses, everything they have to handle. So corporate office is going to have 25,000. So what is the left amount? That is 1 lakh, right? So the 1 lakh will be going to the regional regions. The regions, like they say, like they plan, like with the bottoms of planning, they said like 20,000 they need as their expense, office expense. So, but they do, the budget is very low when you compare with this particular bottoms of plan. Then they have taken 15,000. Okay, 15,000 South has taken as their expenses. What is the remaining amount? 85,000. This 85,000 you have to distribute to the to Tamil Nadu and Karnataka. Correct. So how you are going to distribute? Based on, let's say I am going to distribute based on my bottoms of planning value. So what values I planned for Tamil Nadu? 60,000. Karnataka I planned 40,000. Correct. So 60,000 by 1 lakh. 1 lakh. 60,000 plus 40,000 is 1 lakh, right? 60,000 by 1 lakh into 85,000 gives my Tamil Nadu allocated budget. 40,000 by 1 lakh into 85,000. This is 40,000 plus total amount, which is 1 lakh, into the budgeted amount, 85,000. Gives me the particular budget figure for Tamil Nadu and Karnataka. So let's say what is the budget figure? One. So 60,000 into 1 lakh. Sorry. 60,000 1, 2, 3, 4 by 1 lakh 1, 2, 3, 4, 5 into 85,000. 51,000. So 51,000 belongs to Tamil Nadu. Whatever the remaining amount will be 85 minus 61, which is 24 or 34. So 34,000 is this particular Karnataka. So this 51,000 divided into Chennai and Madurai. What is the ratio? So 30,000 plus 20,000, 50,000 by 51,000, 51,000. Sorry, 50,000 by, this is how much? 20,000 plus 13,000, 35,000. So 85,000, 50,000. Yeah, 50,000 by 85,000 into 51,000 is total these two expenses. Sorry, I will show you in the system like calculation. So how much from this 51,000? How much this Chennai will get? And 30,000, which is this Chennai expense, by 50,000, right? Total for this 51,000. So total expenses are 50,000 into 51,000. 30,600 is Chennai expense. Madurai expenses will be something like that. Same way, 20,000 by 50,000 into 51,000. So this is how you have to calculate this particular top-down budgeting. So one figure will be there at the top that will be distributed to the lower level. Now, any questions on this particular top-down and bottom-up planning?
Yeah, here one question.
Yep.
See, from bottom, for having this top-down planning, is it a criteria that first of all we should have the bottom-up top budgeting?
No, not mandatory.
The criteria can be anything.
Yeah.
The distribution. Okay, fine.
Just we are understanding that terminology, but my client can directly go with the top-down budgeting or bottom-up planning. It is not mandatory that my client should use bottom-up planning first, then they have to start top-down budgeting.
All right, fine, got it.
Any other questions? So, what is budget now? So, budget is basically funds in hand. So, 1,25,000, whatever we discussed, that is funds in hand, that is called budget. The budget will be allocated to the lower level. The next one is rolling forecast. What is rolling forecast? every month or quarter we are going to revise our forecast. So rolling forecast always happens every month or every quarter. What does it mean? Let's say okay, I have January first week, I have my sales estimation. Let's say for the current year 2014, January, February, March, April, like next 12 months, I estimated some expenses or some, some sales, right? No, this is not the right figure. One second. So, now if you see,
It's on the call.
this is my sales estimation. Kindly mute yourself, please. Sudarshan, please mute yourself. Yeah. Now, this is my current year estimations using forecast. Forecast is basically current year estimation. Next 12 months I estimated. When? January 1st week, let's say. February 1st week, okay, I'm going to revise my plan or revise my forecast. Let's say product 2014 February, March, April, May, June, July, August, September, October, November, December, and available 2015 January. Next 12 months will be displayed. So the next 12 months I'm going to estimate again in February first week. From February to next 12 months. In the March first week, let's say, I'm going to estimate next 12 months. In April, again, I'm going to estimate next 12 months. Every month, I'm going to estimate my next 12 month sales. That is called rolling forecast. This rolling forecast can be done every month or every quarter or every year. Every month or every quarter. That means every month I can estimate for the next 12 months, or every quarter I can estimate next 12 months. Q1 I estimate total Q1 2014 January to 2014 December. Q2 I will estimate from 2014 April to 2015 March. Yeah, that is called rolling forecast. So with this, we just completed what is the planning terminology. Now, here one point, whatever terminology I explained, okay, if you Google, it might be difficult. It might give different explanations for this planning terminology. So, based on my experience, I just quoted these terminologies. Now, I will give you one example. Why I have given like this. If you go to like Dubai or Abu Dhabi, okay, their clients, they use the word as budget outlook. For them, budget outlook is current year estimation. They say like, when you go to the client, you ask, right, what you will do using BPC. Then they will say like, we want to do our budget outlook using BPC software. Now, they say like budget outlook means their current year estimations. So now you can easily compare like, but also it is nothing but forecast. Budget outlook is nothing but forecast. They have 5-year plan. So 5-year plan, like your client is having 5-year plan. So 5-year plan, you can give a name as strategic plan. Okay, that is the use. And this is very important to understand this terminology, to understand business planning. Yeah. Is there any questions on this planning terminology? You can unmute yourself Just click on that microphone icon. You can unmute yourself. Right. Let's start with BPC terminology. We are having, there are five terms basically: environment, model, dimension, property, and member. If you understand these 5 terms, yes, you can 100% understand what is BPC. It's very easy if you understand what is these terms. Okay, let's start with first start with environment. What is environment? So when you implement a project, right? When you implement a project, first you have to install the system, right? So let's say you have gathered the requirement, you have completed your blueprint, everything, right? Now you have to configure in the system. What is the first step when you configure in the system? First, you have to install the system. When you install the system, what are the things you have to install? So basically you have to install BW system, right? To install BPC. First, I am talking about BPC NetWeaver. Yeah, you have to install BW system. On top of BW, you have to add some components, CPM BPC component and HANA BPC component. Then your server is ready. Your server is installed. When the server installation is completed, see, this is the work of basis. Yeah, this is not our work. As a consultant, you are not going to do anything on this. The particular basis is going to do some post-installation steps. Post-installation steps. As part of this post-installation steps, they are going to activate the BPC content. BPC also having some content. So, what is this BPC content? What SAP did, they created one environment for us. Environment in the sense, let's say, environment is like info area in BW. If you don't understand what is BW, info area, environment is equivalent to your client, our customer, let's say. Suppose my customer is Vodafone. That means my environment is Vodafone. My customer is Reliance Industries. That means my client, my environment is Reliance Industries technically. So, as part of post-installation steps, we are going to activate BPC content. As part of BPC content, we are going to activate environment shell. Okay, what is environment shell? Environment shell is one sample environment. Environment shell is one sample environment. Sample environment, or you can say it's a skeleton. So there SAP configured some basic BPC system, and they have given a name as environment shell for that. So first they will activate the environment shell. Okay, till this basis works, right? So installation, post-installation steps, and activating environment shell is basis work. After that, your work starts. Now as a consultant, what you have to do, you have to create an environment for your client. Okay, for that already SAP has created, right, environment shell. Already SAP has given one environment called environment shell. Whether you can use this environment shell or not. So remember one point, you are not supposed to change anything in the environment shell. You are not supposed to change anything in the environment shell. That is why you have to create an environment for your client. What you are going to do, you are going to copy this particular environment shell to create a new environment. So there is no create option for the environment. you have to copy the environment and you have to create the new environment. So this environment shell is having some sample models, dimensions, security settings, reports like this. All those things will be copied. Okay. Let me show you the environment shell. Let me show you how to create this environment, new environment. Okay. Then I will show you dimension, security settings. Okay. Right now you have to understand what is your what is environment. So basically, environment is my client. Okay. So if some of you know BW, let's say environment is equivalent to info area. Some of you are ECC consultants, right? So as per ECC terminology, environment is equivalent to my client. So when I'm connecting to the system, I'm going to give my client number, user ID, password, right? So it is equivalent to client. So here, let's say I have Vodafone, right? My company is Vodafone. Let's say my company is Vodafone. This Vodafone will be my environment. Okay. My Vodafone company is going to use some capital expenditure planning, operational expense planning, and sales planning. And these are called as my models. I'm going to explain detailedly everything. Okay. So capital expenditure based on some dimensions, OPEX planning based on some dimensions, sales are based on some dimensions. So how to create this environment, that is our objective today. Right? Vodafone is my environment, my client. So how to create this Vodafone? From your system, just click Windows R to connect to the system. Okay. So this run command will open. There you just give MSTSC. MSTSC basically opens the remote desktop. So just enter. So this is the remote desktop. Here just you have to enter the IP address given by the vendor, right? And then click on connect. So here you have to give the password. Log. 1 second. I think give your user ID and password. It is going to open the remote desktop like this. This is my remote desktop. See, here you can see something, right? If I minimize, I will see my desktop. There is one more desktop open. Here, one link is Internet Explorer. Just open the Internet Explorer. I think there are issues with the server. Tomorrow we'll see. Tomorrow's agenda will be like, we are going to create one environment. We are going to discuss what is model and what is dimension.